Traders, welcome back to another video. And in this video, we're going to talk everything TradingView. Give you guys a step-by-step of how I have my chart set up and how I use this setup to pull consistent profits almost every single trading session. So hopefully you guys are seeing the chart on the screen. This is the standard candlestick chart with the volume at the bottom. So if you've never opened or created a layout in TradingView, you know that this would be the first thing that you would see. They provide standard candlesticks with volume at the bottom and is all in one screen. For me, I need to have at least 3 charts on one screen. Okay. And for those who follow my channel from very beginning or maybe even new, you guys will see that IWM is the ticker at the top. I trade IWM 100% of the time, which is the ETF of the Russell 2000. So let's go get started. Again, as I mentioned, that I like to have 3 charts in one screen. In order to do that, we need to go up to the layout setup here and click 3. Right, so we have multiple choices. I think it goes all the way, looks like it goes all the way to 16, but all I need is 3. As we choose 3, we have a far left, a middle, and a right. So for those who are new to my channel, I use TPO, time price opportunity charts only. I do not use standard candlesticks, which you see on your screen today. So we're going to make those changes. On the far left is going to be my weekly TPO. The middle is going to be the daily. So each profile is going to represent one day. And then on the far right is going to be volume footprint. We'll get into that in a minute. So let's start with the far left. The very first thing I want to do is get rid of the volume profile or the volume at the bottom and then the standard candlesticks. So to start with the volume, you can either delete it or you can hide it. Since I don't use it at all, go ahead and I will delete it. Next thing, so now it's gone. So the next thing I want to do is I want to change this standard candlestick to a TPO. Or first get rid of it. So I'll go up to the ticker, more, settings, and I'll just uncheck the body, the border, and the wick was already gone. Hit OK. So now I just have a blank screen. I have no TPO, I have no standard candlesticks, and I do not have volume at the bottom. All right. In order to add the TPO, we'll just go into indicators, and I already have it clicked as my favorite. Time price opportunity is what TPO stands for. Go ahead, click on that, and it takes a minute to come up. And now we have a TPO. Now, again, the far left chart is my weekly. So each profile represents 1 week. Right. So this whole thing is a week, right? But this is broken up in different days. So like the week started July 28th. This would be one profile on a day, July 29th, all the way to August 1st, this past week. But it represents 1 week. So this is a one way to actually look at it. All right. So this is the extended version. If we were to go into settings and uncheck expand blocks, we'll see that this is the standard way of looking at TPO. Again, this is one TPO that represents an entire week. And we can see that here, TPO 1 week. 1 week. This is from the 28th of July 28th to August 1st. But I like to have it extended. So go back to expand blocks. So again, this is 1 week, but it's just broken up into different days. So Monday all the way to Friday. Okay, and you can still see the standard there. And what I'm going to do, probably make it a little easier. Let me just expand it. Okay. So now that I expanded to just make it one screen, you can see each TPO from here, here, this one, this one, this one, so on, are all representing 1 week. Okay, so this one is Monday the 23rd, June, Monday the 23rd, all the way to Friday, June the 27th. And then it picks up another week, another week, another week, another week. And then this is the past week where it's extended. Let's do uncheck. So now all of them are just standard way of looking at it, right? Again, each one represents 1 week, and this is the standard way of looking at it. Standard way is great, right? Because it provides not only a representation of the entire week, but it also tells you what areas or price points had the most activity, right? So if we focus on last week's here, you can see a bell curve there, a bell curve here, and a bell curve there. So it's telling you where market participants who participate in the IWM market, what price point were the most active. All right. So from here, 224.85 to 223.71 was an active area. I would say roughly here to here is a curve. 223.32 roughly to 222.43. And then lastly, I would say all of this is a curve. All right. 221.65 down to 219.73. It's giving you exactly at what price point where other participants who participate in the IWM market, which price point, where were they most active? Where did they see value? All right. So we had a dip here or a curve here that dipped down. So there was all this activity. And then the activity kind of faded a little bit. Then it picked back up again here, faded, and picked back up here. Great information that it provides. And it also tells you value as well. So I use the 70%, right? Value high to value low the entire week. Tells you the 70% of value that other market participants who traded in this IWM auction, where they saw value, right? And that's always between value high and value low. That's the 70% of activity for the day. Outside of that, it's extreme high where they did not agree at all. So buyers did not, or yeah, buyers did not agree that price should go higher. So they kept it down. They didn't go higher than here. And then vice versa. Sellers didn't agree that price should go down here. So buyers end up buying it up, or vice versa. Buyers didn't agree that the price should go any lower, so they bought it up. Okay, so it gives you great information. I like to extend it because extending it actually provides you more. So if we go back up to the settings, and I like to again extend those blocks, and I like all of them to be extended, and hit OK. So now it's giving you the same profile. It's breaking it up in each week. Value high, value low of this week, value high, value low of this week, and then this past week, value high, value low, which are profile down here from Friday. The reason I like to use to extend those blocks or expand the blocks or the profile is because now you get to understand liquidity. You get to see exactly where the money lies. Or in better terms, or probably another term that most people know is either liquidity run or liquidity rejection, or i.e. liquidity sweep versus liquidity rejection. This opening it up, expanding the profile allows you to see that. And we'll go a little deeper later on in the video with it. But I personally want to have my TPO open, expanded. All right. So let's go ahead and minimize the screen and bring it back. So now we have the weekly TPO expanded on the far left screen. There's a couple settings that I want to change as well. Here. So let's go back up to the weekly TPO, go to the settings. Now, a couple of these settings are going to be preference based. Others are going to be, I need to have these on to see. Okay. So aggregate colors, that's a preference. I like the grays. I want to start from the lightest gray to the darkest gray. That's just my preference. You can have blue, red, whatever you prefer. The next setting is blocks. You got to have it, otherwise you won't see TPO. So if I turn it off, you won't see the TPO. Letters, you don't need it. Basically, what the letters are is A TPO, the standard industry is 30 minutes per each TPO. So each one of these TPOs, and let me actually, I want to extend that so we can see that together better. Here, each TPO, that's that one here, that's at 14:30. Here's at 15, right? Each TPO represents 30 minutes. And the letters are basically representing those 30 minutes. So at cash open 9:30, that would be A period, represents the first 30 minutes. B period would be the second 30 minutes. C would be the third, so on and so on. That's what the letters are. But if you know that it represents a period, it's up to you. It's a preference thing as well. I don't need to see the letters to know which ones represent which. Okay, so that is the letters. Let's go back to the settings. So I don't need the letters to show that, so I keep it off. Again, I like to expand the TPO, right? So let's go back to settings. I like to have it expand the TPO to be expanded or open. If you uncheck it, it'll just take you and show you the standard way of looking at it. So again, I like to have them all expanded so I can look at liquidity. The next setting is POC, which is point of control, which is basically the darker color in the middle. That's just telling me where the most contracts or the most activity of that week, because we're looking at a weekly TPO, where was that traded? At which price point? Okay. Otherwise, you turn it off, it'll go away. So right here was the TPO. I mean, sorry, POC. Click it, it shows you the POC. Okay. And I don't have anything extended. You can have it extended if you want to show, further to the right, but all I need is to know where it is. So I have it on. I don't need to know pour high, pour low. Single prints I do turn on, but you don't really need it. If I turn it on, you make it whatever color preference you wanted to make. Now you can see here, right here is a single print for the week. I do have that on, so we'll keep that there. Uh, Value area high, which is the top of the 70% of the trading day, or in this case, the week. I definitely have that setting. The value low will be the bottom, the lower of the value of the 70%. Definitely keep that on. And I do not need open. I don't need the indicator to tell me when price open for the week in this chart. So I turn it off. Don't need close as well because I can always look at the last 30 minutes of a session and I can see these numbers tell me open, high, low, close at the top. So I don't really need an indicator to show me that. All right. So that is the left profile or the left chart, which would be the weekly TPO and how I have my settings. You can also put volume profile on there. You want to show it. It won't show unless you have it on the standard view. If you have it extended, volume profile will not show it. So for example, I have show volume profile. If I was changing it to standard, now you get to see the volume profile in all the settings, value high, POC, volume low of the volume profile. Because I don't use volume profile on TPO chart, I turn it off. Okay, so I'm extending it and I turn it off. And it would be the same settings here if you want to show volume uh, area high for the volume profile, volume area low for the volume profile, or the POC, point of control for the volume profile. Those options are there. So now that we have our value high, value low, POC, we have it open or expanded. That's all we need. The standard candlesticks and also volume profile for our weekly TPO. Again, our left chart would be the weekly TPO. So it represents the entire week. Last week was it the 28th, July 28th to August 1st. So I have the value low, the value high, and the PLC of the entire week. So now that we have that done, let's move over to the middle, which would be pretty much the same as the left chart, but will represent a day and not a week. All right. So basically, it's going to be the same thing. Just make sure you click on the middle chart. See how I highlighted the left, middle now is highlighted. And I just go back to the ticker, go to more, settings, and I don't want to use standard candlesticks. So I just uncheck the body, border, and wicks. Hit OK. Next, I want to remove volume. Again, you can either delete it or you can choose to just hide it. Your choice. So now that we have a blank screen, let's go into indicators and add our time price opportunity. That load. Okay. So it has standard for the week. I'm sorry, for the day, and then this each one is going to show a day because we have it. Oh, I'm sorry, we have it still week. So we're going to change that first. So it looks like it popped up as a week. So let's go ahead and change that to a day. Go to the settings, input, and we're going to change it from a week to a day. Okay. And I believe that is all we need. Manual, 15, 70%. Yep. So let's go ahead and go to style. Again, I am, preference. I am light gray to dark gray on the aggregate colors, block, no letters. I like to extend it. I like to extend all, POC, value high, value low. I do not need to look at the open or the close because I can always go to each TPO and see that. Again, the same for the weekly. If I wanted to look at volume, I can activate that, but I can't look at it unless I close it. Close it here. So because I like it open, it will not show that. And volume again has the same thing, value high, value low, POC. And that is it. That's all I need to look at the daily. So I'll hit OK. So now we have our weekly TPO that represents 1 week. We have our daily TPO in the middle that represents 1 day. So each one of these profiles represents a day. So start on Monday the 28th, which is the same week here, Monday the 28th. And then this profile here, this profile right here, right there represents Monday the 28th. This represents Tuesday. This is Wednesday. This is Thursday. And this is what happened Friday, August 1st, right there. All right. Now that we have those two set up, now it's time to move over to the far right, which is my volume footprint. Okay. So to click here, just to make sure we have that box set up, I want to go ahead and let's go ahead and remove volume. Okay. And then we're just going to go over to this little chart selection where I have standard candlesticks, time price opportunity, and volume footprint. Let's go ahead and click volume footprint. And now it's changing. So we do, and I'm gonna open this screen up here so you can see it a little better. Okay. If I take a deeper dive, open it up a little bit. Now, not only do you see standard candlesticks, but you now get to pull the curtain back and you get to see actually what happened in this candlestick. Like if we focus on this red one right here, okay, that one right here, we'll see inside of that candle. Let me open up a little wider so we can see it. All right. We can see what happened in this price point between 224.41 to 223.53. So we're focusing on this area right there. So not only do we see candles, the plain or standard candlesticks, but we get to see what happened. There was a lot of selling happening here with a lot of volume from between 224.38 roughly down to 224.13. There was a lot of selling. Again, a lot of selling here between 224.11 down to 223.83. A lot of selling. And then even more selling happening here, 223.81 to roughly 223.53. So now not only do we see the candles that represent open, high, open, close, high, and low, we also get to pull the curtain back, open the door to see exactly what happened in that candle and where the pressure was to either buy or sell. Okay. So let's go over the settings for volume profile. So if I was to open this thing up here, settings here, settings are here. All right. So basically pretty much everything stays the same with the exception of um some preference settings that you may want to have. Everything is pretty much standard. The body, border, and the wick, I want to see all of that. The standard candlesticks. Green is to buy, red is to sell. So green is a positive candle, positive move higher from close to open. Red would be the opposite. Borders I want to show the same, and then wicks the same as well. Um, let's see, row size is really a preference thing. It's up to you. I use the length of 14, which is the standard settings. I don't change it. Definitely want to use profile. And here is where I want to change. So if you were to change the type, well, look at the type. There's different options. You can look at bid and ask, which they have, TradingView has as buying sell. And actually, let me open it up to do that first. So I think it's easier to see if I open it up to one, and that's the wrong chart. Bear with me. This one here, open it up. Okay. So you can see if I was to do bid and or buy and sell is how they have it. Can I, let's see, there we go. Good. Go back to the settings. All right, so with buy and sell type, you can see on each candle, if we was to focus on this red candle here, you have the buying and the selling on each side. So selling, I will buying on the left, selling on the right. All right, so they give you that option. I like to use delta, positive or negative delta. So positive delta is buying, negative delta is selling, and it adds the volume with it. If you guys have been in the market long enough, you know that bigger players, whether it's the hedge funds or the banks, they can hide orders. There's different ways they can manipulate and hide their intended direction, but what they cannot hide is volume. So because I know they can't hide volume, that's what I use. Bid and ask, or in this trading view setting, is more buying and selling or buy and sell. That's cool to see because in the footprint you're seeing executed orders. So all of these are orders that were actually market orders or limit orders turning market. That's great to see. But I think the real value in this is to look at the delta, buying and selling, who's in control, and the volume with it. Okay. There's other settings as well, total trade, which really doesn't give too much, in my opinion, any insight. Okay. So I use delta, which is positive delta is buyers, negative delta is sellers. And then with the volume of each price point, you can see how much selling or how much buying happened at that price point. And again, the colors is up to you. To me, it just makes sense. If it's selling, the selling background should be, um, the lighter red is the lighter volume, and all the way up to the darker red is the most volume in that area. Like there's some heavy selling here versus this one, which is a lighter, or this one, which is lighter than this one, right? So in my opinion, that just makes sense. And in buying, it's the same thing. It should be green, going from lightest to darkest, telling me, light volume versus heavy volume. Okay. Value area, I don't have it checked, but it's always going to be 70%. I really don't care to look at on the footprint chart side of it. POC, I don't have it checked, but if I had it checked, you can see that it darkens it up. And you can change it to whatever color you want to change it to. Show summary, which was this delta, all right, showing you the delta, who was actually in control of that candle, the total volume, how much was actually bought versus sold. You can have that information at the bottom. I keep it checked, even though you have to expand the view to see it, because if you was to close it, it goes away. Right? So I don't look at the charts this, zoomed in view. So having it checked or not checked doesn't really matter to me. Okay. I don't have imbalance, even though I do have it 3%. I don't have it highlighted or anything like that. I don't do stacked because that can be misleading as well. And that is it. Oh, and I'm sorry, the last part, session. Session, I do standard or regular session. So when it comes to the footprint chart, I actually have it expanded because I want to see post and pre information. Okay. If I do standard or regular, it only going to show me from cash. So cash is 9:30 a.m. to 4 p.m. Extended will give you those same hours, cash hours 9:30 to 4 Eastern, but it'll also give you post and pre-market as well. All right. Um, you can do time zones wherever you live. I'm on the East Coast, so it would be Eastern New York. And then hit OK. And that is how my footprint looks, which is on the far right of my chart. All right. Lastly, before we go, now that we have the far left, which is the weekly TPO, and I have it extended. The middle, which is my daily TPO, and I have it extended. And then lastly, the right chart is my volume footprint, being able to look inside the candles to see exactly what happened at what price point. The last thing I want to do is I want to make sure these two, the left chart and the middle, are regular hours, opposite to the footprint chart, which I want to see the extended hours. I want to see post and pre-market. So if I click on the far left, I just want to make sure it is regular, which it is here, RTH, regular trading hours. And then also the middle, the same thing, RTH, regular trading hours. And then the footprint chart is extended trading hours. Okay. That is it. That is how I have my chart set up. Before you do anything, once you get it set up the way you like it, go up to the top right here and right under the name that you choose to label your layout as. Just make sure you hit save. So the next time you log into it, you won't have to do it all over again. All right. So now that we have our TradingView set up correctly, I want to talk a little bit about why I have my TPO set up here, why I use the extended version of it rather than the standard. And I'm going to actually focus on the day, which is in the middle, and I'm going to extend it so we can see it a little better. So why do I use the extended version or the extended look of the daily TPO? To me, it gives you a great insight on where money is located. Okay. So I want us to focus on the middle. Okay. I want us to focus here. All right. So it's going to be from this one here. Okay. So I want to focus on these TPOs here. And let me move the chart down, make it a little easier. So this is going to be July 17th all the way to July 30th. I don't know if you guys, I don't know my audience, so I can't say who you are or what your experience are. But most people, when they see this, especially people who were like me, who traded at the beginning, standard way of looking at it and standard terminology, right? So every trading book, every YouTube talks about support and resistance. And what I've always seen was a line, right? It's always been this one line like this is support, right? Because it keeps hitting this line. That supported there, was just supported here, was supported here, and then it ran through it. Then it became support to resistance, right? If I extended more, that support becomes here, supported, drop support. Now it's resistance, right? Everyone who starts off trading reads the same books. They look at the same YouTubes, and they all talk about the same thing, right? But that's not true support and resistance. If you are in the market long enough, you know that the market is in constant search of liquidity. It's in constant search of money. Where are the money? Where is the money? And where is it located? And how can we either continue to take money, or now that we realize there's no more money there, let's run through it? So the terminology is either liquidity sweeps, liquidity rejections, which is liquidity grab, or liquidity run. Those are the terminologies I'm going to use in this example, okay? Liquidity sweep or liquidity run, liquidity grab, or liquidity rejection. And as I say those terms, I'm going to tell you why and what those means. So again, we're going to focus on the middle here, these TPOs. And this is a daily TPO chart. If you notice, you may have already noticed on Thursday, July 17th, price either stopped here, right, and it ran up. So here, right, there was a point where price came in up to here, or either maybe dropped or started here. I don't know exactly, but price will not drop below here. Okay. And if you may have noticed again on the 22nd, right here, July 22nd, price came back to that area and will not drop again. Okay. And and on the 18th, we tried, it didn't even get no closer to that. Right. It didn't get closer to these circles. But the 17th and the 22nd, price will not drop past there. Technically, it wouldn't really drop past here, right? 222.08, right? Before dropping. But these were the lows of that area. All right, so I just wanted to point out that real quick before I show you why exactly I used extended. So I noticed that price was having a hard time on the 17th, on the 18th, the 22nd, the 25th a little bit, the 29th. Price would not drop past this liquidity area. So if I was to mark that, rectangle, price had a hard time getting past that area. 17th. Ooh, let me go back. Sorry, I need to lock it. Let me try it again. And I'll lock it this time. Here to here. And let's lock it so I don't accidentally move it. 17th, 18th, 22nd. Yeah, you could say the 25th. And the 29th, twice. 11:30 and right at close. Okay. So we had liquidity sitting in this area, in this box. All right. Price came into it, took money. Came into it on the 18th, took some more money to buy up. On the 28th, went a little deeper into it, took some money, bought up. You can probably argue the 25th, but then again on the 29th, a little bit more. All right. And then bought up. If you notice, on the 18th, it took about all the way down to 220.82. On the 22nd, it took damn near all of it. All right. So, but left some more here. And then on the 29th, it really only took some of it because there's no more orders here. Right. So one, two, you can argue three. This was a liquidity rejection. Price came into here, rejected it, bought some more. So sellers, oh, I'm sorry. Yeah, I'm sorry. Sellers. There were no more sellers down here. It was all buyers, right? So buyers felt that this was a good place to purchase IWM, right? Did not allow price to go further down. Here's the 18th. Price tried to come into it. Sellers tried to sell it down more, but buyers supported it. There's some more money down here. Here is the 22nd. Sellers really try to drop it down, but buyers said, no, there's more money down here. Continually looking for money, continually looking for liquidity. There's money down here. Again, on the 29th, price came back down to here. There's more liquidity. There's more money. Market found more money down here to move higher. Now we go out of the circle to July 30th, Wednesday. What happened? Price went through liquidity. So here was a liquidity rejection or a liquidity grab. You can use either term. Here's a liquidity grab or liquidity rejection, back up. Here's a liquidity grab, a liquidity rejection, back up. Again, you can argue the 25th, come into it, maybe touching it, back up. And then again on the 29th, liquidity grab, liquidity rejection, back up higher. So buyers supporting, 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 back up. So that's the real support and resistance or supply and demand. And then if you focus outside of the circle, on the 30th, Wednesday, this becomes, it went from liquidity grab, liquidity rejection to now liquidity run, i.e., liquidity sweep. So now price is below liquidity. So what happens next? In this TPO on July 30th, well, they rejected it now. So that's your real rejection, support turn resistance. It went liquidity grab or liquidity rejection, liquidity grab, i.e., liquidity rejection, liquidity grab, i.e., liquidity rejection. Again, you could argue the 25th, maybe liquidity grab, liquidity rejection on the 29th to now liquidity sweep to now turning back into a rejection. So what the market is telling you is that there is money to be made here. And what does most trading books tell us? It tells you, or trading books or YouTube traders, they tell you to put your stops right below swings, right? So every book tells you this, and the market knows this. Here's a swing back up. What books tell you, put your swings right here. Get out of your trade. If it goes below here, protect your account. What does the market know to do? They know you put your stops here. So they came and took those stops, which is liquidity, money, and they also took this stop, this swing. There's some stops down here. They took those out, back up. Now again, you can argue the 25th. I probably each his own. Yeah, you could probably argue that it came in and liquidity rejected back up. Here on the 29th, they really rejected liquidity. And why did it come down here? Again, every book tells you to put your stops at swings. Here's another swings. If you're going to give the sauce away, you can't be mad that they're using it against you. Every book tells you this. Swing low, keep your stop 2% below that swing up or that swing low. The market here does the same thing. Keep your stops or put your stops below the swing low to protect your account. So what happened on the 29th? They took out those stops and they took out those stops. Again, the market is in constant search of liquidity. They know exactly where you're placing your stops because every trading book tells you to do the exact same thing. All right. And then finally, on the 30th, they realized, well, we already took those out. We took those out. We took those out. Here's one from the 29th. We already know they put their stops out here. Let's go ahead and take that money. We're going to run through liquidity. Once this is taken out, there's no more money to take out. Maybe here. Right. They haven't touched that one yet. Maybe there. What happened? Ran through liquidity. All of this money, the market knows is sitting there, so they run through that liquidity. Now, because they already took out these stops, there's no other stops to take out. So why would I continue to buy up when there's no more money there? Through liquidity. So now what happens? So now we ran through it, all this money. We come back into that area. And let me delete this. I won't fuse. Let me delete these circles. Now that we've run through liquidity and we're trading down, IWM is auctioning down. Now that we ran through that liquidity here on the 30th, where do every trading book tell you to put your stops? If we're going to start running down now and you're analyzing the market and you're seeing that we're turning, right? We started to consolidate. Now we're finally running through it. Where do you put your stops? Or where does every book or everything tell you to put your stops? There's a swing there. There's a swing there. I don't want to, let me move it out of the way. There. So it's two swings. Swing low. Another swing low. Right. So these haven't been touched yet, right? This one did, but this one hasn't been touched. So there's some stops probably sitting here. So any sellers that were in the market that are maybe holding, you guys are doing great because they didn't take out your stops here. Right. But what I wanted to point out is that after the market takes out these stops here, 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 liquidity rejection, i.e., liquidity grab, they realize there's no more money here. Again, the market is in constant search of liquidity. Once they realize these stops are gone, because again, every book, every YouTube trader, and I do that with air quotes, tell you the exact same thing. If you're hearing it, then you know the bigger players know it as well. And you guys continue to do the same thing. Let's take advantage of you guys and let's take your money. Here, 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 and here. Now there's no more money to take, run it through. All right, so we're really going to drop it down. Who we know we would put your stops at. You're going to put it here, you're going to put it here, and put it here. These swing highs back down to swing lows. And when these people right here are actually sitting pretty here, here, and here, the market hasn't taken advantage of you yet. Hopefully, anybody's watching this video who may have got in these areas, hopefully you took profit down here. You should be living large from August 1st. So that is an example of why I use not only TPO, but why I extend it. So again, the regular way of looking at time price opportunity is great. It gives you a lot of information. It really does. It tells you value. So if I was to change this to the standard way of looking at it, you get to see where other participants of the IWM market is determining value. If you're looking here, July 23rd down to July 25th, you can see the 70%, which is the value high and the value low. Between that, value of IWM is slipping. It's starting to fade. Okay. Has a little bit of a pop, but then starts to fade, really starts to fade. So it does give you great information, but it's limited, right? Once you get to understand where the value and where value could be going, then you want to open it up. Now you want to find the money. Where is the money sitting? Okay. And that is how you become consistent. Again, the market is in constant search of liquidity. Once it runs through liquidity, expect that run through to be tested because, again, every trading book, we all know that once in every book, they tell you once support becomes resistance, then that's the place where you want to sell. Technically, that could be true, but what it fails to mention is that these stops where you, and I know a lot of traders get frustrated because I used to get frustrated as well. Why I keep getting the stop and then it going in, and then the price starts to go in the direction that I thought it was going into. It's because you keep giving, because let's see, how do I want to word this? Because every book says the same thing. And because the market knows that you're going to read these books and do what they say, you're going to place your stops there and they're going to continue to take your money. So hopefully with this video, you not only got the how I set up my charts, but it's also you get to understand why I have my chart set up this way, why I have it open, and what I look for. I look for the bell curve or the distribution, which is the bell curve, which is the between value high and value low, the 70%. But it's also trying to find out where money is located and how to pinpoint entries based off where money is located, whether we're going to do a liquidity grab or i.e. rejection, or we're going to run through liquidity or i.e. liquidity sweep. All right, everybody. Don't forget, if you haven't already, to save your charts so you don't have to do it the next time you log in. I actually like to do autosave so I don't have to think about it. And then make sure, give me a shout out. Subscribe to the channel. This information was great. Leave a comment if you have any other questions or if you want me to go over, maybe do another video about liquidity, runs, rejections, or sweeps. Maybe take a deeper dive into it. We can definitely do that as well. All right, everyone. I hope this helped, and I'll see you guys on the next video. Bye.